Hello, everyone. Hope I'm audible to all of you. So we are meeting probably after a very, very long time. After a very, very long time, I'm coming live, in fact, on YouTube. Can you confirm whether I'm audible to all of you? Uh, Meanwhile, by the time you confirm me, I'll also share my screen because what we are going to do basically is. Hi, all. So let me let me just find out how to share a screen actually. uh okay, screen recording, privacy. I need to actually privacy and then screen recording. Google Chrome will not be able to record the content of your screen until it is quit. You can choose to quit Google Chrome now or do it on your own later. So, guys, I need to re-log in. So, just give me 1 minute. Hello, everyone. So, can you tell me whether now I'm audible? I'm sorry for all these issues. So, I'm using one software here to. Yes. So I think yeah. So now you can see my screen as well, right? Yes. Great. So let me just directly jump to the agenda. So here we have Telegram, where I created this Telegram channel when we started actually advanced option course. And that was the time when we used to share some paper trade, explain them. But then we started teaching people the concept. And then, now we are at a stage where more than, I think, 2,000 people have already joined this course. But I got a feedback from some of them that they are still not able to very confidently trade. So I thought last month only I got all these complaints. So I thought, why not I demonstrate, the same concept which I've been teaching in advanced option here in my own trading account. And for that sake, I started trading and using the same theta decay and forward volatility and risk reward ratio and everything else. I mean, using the same concepts, I started trading. And last month I started, and I started with a capital of 10 lakh rupees because most of the learners I know, they are having the similar amount of capital. So, one second, let me just show you this. So this is my account actually, and here is the position. So I did some trade today. Few of the trades are from carry forward from yesterday. So idea here is that I teach you concepts in the course, and using the same concept, I'll demonstrate some trades here. Consider today as the very first trade because last 1 month I've been also experimenting, and this is the result of the experimentation. Let me just show you the PNL. I think last 10th I started trading, 10th or 11th, I guess. Yeah, 11th of last month I started trading. uh, a lot of charges has been given for sure, but in this 3 lakh account, 2.35 lakh which has been generated. Obviously, as I keep saying also in the class, that this is not free money. Obviously, a lot of risk have been taken. A lot of risk, when I say that there were multiple trades, I think 10 different trades which I have taken, and on every trade we probably made around 35,000 rupees, and few trades we lost 40 50 lakh thousand rupees also. So the result is this, like multiple trades. So from here onwards, what you can say actually is that this trade which I have carry forwarded from yesterday, from today itself, consider this as a very first trade, and then I'll try to relate it with our course, that the concepts which I taught you, how I use the same concepts to make this trade. Now, these are the open trades. Tomorrow it may give me a loss, it may give me a profit, I don't know also. I mean, I have the predictability, but anything can happen, as you know, in the market. So this course I'm talking about, and this announcement of the live have been done for this channel only. And so let me explain that why I took this trade and carry forwarded it, and that's how this whole live session will be about. So are we all on the same page? All right. So some people are saying Hindi में बोलिए. हिंदी में okay, so let this session go in English 9:35. ये सेशन हिंदी में चलने इंग्लिश में चलने दीजिए. 10:30 को मैं दोबारा आ जाता हूँ, क्योंकि बहुत ही 15-20 मिनट का ही सेशन होगा जब मैं ट्रेड एक्सप्लेन करने वाला हूँ. तो 10:30 बजे हिंदी में कर लेते हैं हम लोग. ऑल राइट. सो here let's go. And so already, let me first open the trade itself. So I think I have, just before this class, I just before this, yeah, so this is the open trade I have already listed here, if you can see. So let me explain you the trade first. So what I have done is, I have bought month end call and put both in the same quantity, and have sold this week expiry call and put. So if you go to NSE website, market data, derivative market, go to Bank Nifty, option chain. In this option chain, you can see that this is this coming expiry this Thursday itself, 3 days from here, and the month end expiry is on 31st March. So this one I have sold, and the strike price which I have chosen is 36,500. So 324 rupees is the closing. 324 is the closing which I have taken, and I have to record IV. Okay, so the IV here is 39.60. So here we can record the IV of 36,500, which is 39.60. 39.6. And IV of the one which I have written is 35,500 put, which is 283, and IV again is 39.56. So 39.56. So I'll tell you the logic that why I have taken this trade very briefly. I mean, everything cannot be explained. What I'm going to explain you, that what I'm forecasting for tomorrow in all the market case scenarios. So this is the IV of this week options, and the one which I have bought. Let's record the IV for that also, which is 31st March. And here the strike price which I have taken is 36,500, which is 32.5. 602 is the call price option, 602. IV is 602, and here 32.54. 32.54. Then 36,000 put itself I have taken. So this is 728, and IV is 33.07. 33.07. 07. So what you can see here is, I mean, I keep teaching you all into the class that it's the IV which is the byproduct of the price at which the option has been already traded. So if the option has been traded by buyer and seller because of the supply demand at this, as per Black Scholes formula, 39.56 is the IV on an average IV of this week options, and 33 is the average IV of the next month options. I mean, the next week option, which is the month end expiry options. So one of the basic assumption which I had was, the option prices are probably a little expensive for this week, and for the next week is relatively cheaper. So let me buy them. So this is one theory which I observed. I generally don't find this kind of scenario always. So that is the reason, I took this trade. One of the reason could be that in this week you just have four trading sessions. So if you just have four trading sessions, prices didn't decay that much. So Friday and Monday, whatever together could have decayed, it didn't decay in just single day, and that's why probably we are still getting a better premium to write. And you don't want to do naked, as I keep telling you that you always have to be in a position where you always know your maximum loss. So if I'm writing similar amount of call and put and buying also, I know that in worst case scenario, if tomorrow even bank nifty goes for a lower circuit or higher circuit, I may lose a huge amount of money, but that will be limited money, probably 10% or 15% of my total capital. So this is just to keep a check and balance on your behavioral finance aspect. So this is what I have been teaching you guys actually in the class. Now, let's see also about one more thing. So one thing which I keep teaching you is also the theta decay curve, where you know that the price of the premium decay very, very faster in the nearby options. So here, if I talk about this week options, it is probably sitting here. However, if I talk about the next month option, I mean the coming month option, then probably only it has reached at this level. Let me just So one theory which I applied also is this theta decay. So if you see this theta decay curve, probably this week options is somewhere. So if I divide it into four part, and one part is already over, then you can see that somewhere here we are there. And by the time tomorrow market will close, it will come somewhere here. So rate of decay of this week option will be faster than something which is standing here. So using this assumption also into the picture, I carry forwarded this trade. Now what will happen tomorrow is nobody know. Okay, no, even I don't know. But then, as I keep teaching you also in our advanced course, that you must trade with certain kind of predictability, that if something happens extreme, what can be the maximum loss in 90% of the case. If market stays within a range, what will be the profit and loss? So this is what I have calculated between 3 330, and then I saw that this trade have a very high probability that it will give me a good reward, and that's why I carry forwarded this. Now what we can do is, another thing which I keep teaching you people is, where I tell you about always make certain case scenarios where you can go and check that what could be the next week option price, and accordingly how much money you would have been making. So let's say one case is where market stay flat, I mean 50 points up or 50 point down, probability of bank nifty staying in a very tight range of 100 200 points is also very much possible. So let's say market stays flat, and then see that tomorrow what could be the price of these options. Certainly we are not predicting volatility here, so we'll keep volatility in check, means freeze. We'll use the same IVs and try to see that what kind of decay can happen in both of these option prices and what kind of money we can make. So is it making sense when I'm explaining you these trades, guys? Right. So I think it must be making a lot of sense for everyone who is doing advanced option course. And so here we are at the course right now. Let's talk about using the option Greeks, which I have explained you and given you in the course also. So I'll go to the one of the Python code which I have given you. So here we have Greeks calculator. We can use this. This have almost everything, all the Greeks plus the pricing and everything. So let it open, and what I'm gonna do is just take some values. So let's say here we have, let's run this code first. Now let me just enlarge it. So stock price. Well, to get this stock price, we have to see that what is the underlying bank nifty. Underlying is 36,018. So 36,018. Let's talk about the call price. So 36,500 call price. Interest rate, as you all know, that exchange itself tells you that they take the interest rate as 10%. So I have given here 10%. Now, days of expiry. So there are 3 days left for the expiry. The call side IV is 39.6. So let's place that 39.6. Let's run this as well. Let's just match whether we have the right price or not. So whatever the exchange is displaying, we are getting the same price if we give the same variables into our Black-Scholes model. So 324 is the call option price. Now let's say tomorrow market stays here itself, and in that case scenario, we are trying to see that what kind of differential can happen. So we will reduce the number of days to 2, and then we see that what is the price of the option. So price of the option is, I think I missed this step, so we need to run this as well. Here it comes 232. So tomorrow, if market stays here itself, it stays flat, then 232 will be the price of the call option. So 2 232. Let's talk about put option. So to use the put option, again the volatility we have to find. The volatility is 39.56. 3 days, 39.56, and 35,500 is the strike price which we have written. So first, let's match that whatever exchange is displaying, whether we are displaying the same thing or not. So here, this is call option, but we need to find the price of the put option. Now, put option here is 283.70, exactly the same price, a bit point 2 or something here and there. So 283 is the right price. Let's say market stays here itself, then we have to reduce the number of days to 2, and then try to find out that what will be the put option price. So put option price is going to be tomorrow at the time of closer is going to be 202. Obviously the decay will happen on both sides, so 202. Now what you can see that approximately 80,000 will be the profit, 83,000 will be the profit through the decay of these options. But as you know that decay will happen, but then I never advise you people to do naked trading. Naked means you might make a lot of money on those days when the decay is happening, but what if one day out of 6 months market crashes by 10%, you can lose all your capital. So just to make sure that on black swan events you are not losing all your capital, be always market protected. It also reduces your margin money. Within a 10 lakh account, you can see that I have taken so many of lots. This just because of the margin money benefit which you get if you do the protected trades. So here you have now the March trades, month end trades, which certainly will have certain decay. So if you have made money in writing, you will lose money in buying. But how much is what we need to calculate. So are you all with me on the same page? Able to understand everything? All right. So let's understand now that what will be the price of the month end options using the same calculator. So now what we can do here is, we know that after 3 days there will be 7 more days in the month end option. So 10 days is the day of expiry which I have chosen now. And if I go to the put option of month 36,000, then you can see here that it is 728 and the IV is 33.07. So I'll change the IV to 33.07. 36,000, 35,500 is the put. So I have not taken 35,000 put, but 36,000 put. So this is my strike price if you see here in the buy trade. So 36,000 put. Let's find out whether the prices are matching or not. So here we have call and then we have put. So the put price with those parameters are coming as 728, with which it is 728. Now if it is 728 and if we reduce 1 day, let's see how much put option will decay tomorrow. What I have increased, oh no, I've increased the, so interest rate, I have to decrease the day number of days. I increase the interest rate actually. So let's see how much it is going to decay. So this is 692. 692. So we will lose some money here. And then 36,500 call. So let's talk about now call. 36,500 call 10, and the IV for this is 32.54. So 32.54. So guys, even if you're finding it difficult, this video is getting recorded. You can watch it again and you have the access for all these things, so you can do it yourself also. So now if you see the call price is 601, let's see whether it's matching or not. So yeah, it's matching 602. So 601.75, I mean, round off 602 is what it is. Now let's see that if we reduce the number of day by 1 and make it 9. So if we are a market neutral trader, and we are not trying to time the market, trying to stay very, very market neutral and thinking that market will stay in a very tight range, then here is what 558 will be the price tomorrow for this one. So 558. So you can see that this is some 44,000, 45,000 rupees is the exact net profit I would be getting tomorrow end of day if market stays exactly at the same place. So many of you will say that, hey, it is not possible that market will exactly stay. So even if there is a 10% chance that it will stay in a range, yeah, 10% chance will be there for this. But then market can go to 1% up or 1% too. So immediately when I took this trade and took a decision that I'll be going back with the same trade, actually I did this calculation only. Now it's already 20 minutes. So let's take one of these situations. So let's say we are talking about first, what if market goes 1% down? So if I talk about this, that market goes 1% down, then I have to do this calculation again. And do you guys want me to do this calculation, or will you be doing these calculation yourself? Can you do these calculations? All right, let me do it. So 36,018 is the stock price. And so let's say it goes 1% up, and 1% is 360 points. So let's say it goes to 36,400 to be very precise. Okay. Then if it goes to 36,400 and we have this monthly call, let's try to find out what will be the price for this. So here, sorry, I have taken another case scenario. So it should be actually 35,600 if it's going 1% down. then the monthly call price will come down to 438. So in this case, this will come to 438. All right. I think I have not done any mistake because, yes, so 32.54. Now let's take 33 as the volatility, and let's talk about the strike price 36,000 put. So how much this will go? So this will go to 938. So this will go to 938. So here we would be losing some money in, you can see that since we have bought it, the quantity difference is there. So we are going to lose some money here. But then we need to find out that how much we are going to make or lose into the one which we have sold for this week. So let's now again do the calculation here, and this calculation is where 35,600 for sure, but this will be 3 days, it will be 39, and 35,600 is the stock price, 36,500 is the call price, call strike. So let's find out that in 1 day decay how much will be the price. So the price will come down to 115 rupees. So what I have done is 39 volatility. Bank Nifty came down. So obviously the call prices will come down. Strike price 36,500. So what do you see here is it will come down to 115. So here, uh, this will become 115. Certainly, market stays flat. We are talking about this one. So down market 115. Then we talk about 35,500 put. So here we'll now talk about 35,500 put. Certainly put price should increase. So in 2 days now, implied volatility remains the same. So put will go to 352. So let's enter here 352. And we will have some loss here. So what do you see here? You see here that even when market is going down by 1%, we are going to make 79,000 rupees profit, assuming we are not changing volatility. Okay. So even in this case scenario, what do you see that I'll place the link of this sheet below the YouTube video so you can do the. But the best thing would be, when you do calculation yourself. Now let's say there could be another situation, right? So where market is 1% up, closing 1% up. So this is one calculation probably you can do using the same calculator, and comment below this video, or check with us, on support number whether your calculation is correct or not. But I'm very sure that even when market is going up 1% up from here, I think in this case scenario also we are going to make some money, some little money. All right. So my biasness was little towards market going down tomorrow, and that biasness was there. Plus, this biasness about that the theta decay will happen was also there, and for that reason, so see, if you see here that there is a 50% chance that market will go up, or 50% chance that market will go down. Even if I take this very very plain simple reason, and then we can also see a reason that market can stay in a very very tight range. So three possibility can happen, and if we give them all 33% weightage, then you can see that in two case scenarios we are going to make money, even when it's going flat, or even when it's going 1% down. Even if it's going 1% up and we are making some money here, then I think this is one trade you should be confident doing it. Now I could see few questions from you people. Okay. Let me first remove this screen. So some people were asking that give me the strike price selection. So there is no mathematical formula. See, I have been giving you the formula for VIX. The video has been already uploaded. And I tell you that when NSE published the VIX data, what conclusion you can take out from there, you know. But apart from them, you have to put a lot of permutation combination and keep seeing where the opportunity lies. When you are equipped with these kind of knowledge, you'll be able to put a lot of permutation combination in place and take your trades accordingly. Obviously every trade will come with certain risk. Even when I'm calculating it with 1% up down and a tight range and I'm making profit, you also know that if tomorrow bank nifty is going and hitting a lower circuit tomorrow itself, because again Russia start doing something in the night. I think some Poland war or some, they have done some strike on Poland, I guess. So anything like that happen, I can lose a substantial 5-10% capital of the overall trade. But then it will happen in one of the case. So you also know that bank nifty hitting a lower circuit, that probability is probably 1%. So out of 100 times 1%, one time maybe you can lose some good amount of money. But if you understand about theta decay, if you understand about pricing, if you understand about putting many permutation combination in place and seeing that what can happen tomorrow after all these things, whether I'll be in profit or loss, and then accordingly you take trade, then you will trade with a lot of predictability. This is the aim of the advanced option course actually, and where we equip with you with knowledge. So don't ask for, we put a lot of effort explaining you people, and now I have also taken a risk of putting my own reputation at stake. I mean, if tomorrow I make a loss and then again I make a loss after 10 days, and I keep making 4 5 losses, you people will start even saying that this can happen, on a streak I can lose 4 5 trades also. So I'm putting my reputation at stake and demonstrating you trade just because of only one reason, that you also have that confidence that you start doing the paper trade, and you have another conviction that the guy who is teaching us, he is actually doing a trade using the same thing, same stuff. So why can't I do it? So for that reason I'm doing it. So don't make it very very complex for us by giving you reasoning for everything, that why we are selecting those strikes only. So strike selection is purely based on the range. So the range and the IV and the premium and everything else. So yes, a lot of other calculation goes into the background when we take these trades. Sometimes we take iron condor also, sometimes we take this, but in everything you see that there is a theta decay always playing into picture, always playing in the background. So can you guys will be able to do the calculation for this one, or you want me to do the calculation for even 1% up, since today is the first class probably, and I'm planning to do it every day, so tomorrow I'll come and I'll show you whether we are making profit on this trade or making a loss, or where exactly I have cut the trade, booked any profit or booked any loss. So those, and why I did that, so that psychology I'll explain you. Now, see, I also keep telling one thing in class that one second, let me add this. So I also keep telling one thing in the class that you doesn't matter whom you are learning from. If someone is going to teach you option pricing, he will teach you Greeks. He will teach you Black-Scholes model only. And then there is another thing like you have a trader who is also a teacher, and then if he is teaching you, he should be teaching you few things which he is also doing on gut feel. So why I'm taking different quantity, why I'm taking different selections of a strike, is something which is based on my experience, where I have seen that in which case scenario how much decay will happen, when the IV will increase, when the IV will not increase, looking at the global market and so many other things. So you have to develop this skill by yourself. I will, if I share 30 40 traits like this, probably you will be able to develop it yourself. So lot of people are very much in hurry to become a very very successful trader, or looking for a direct formula, or a, an instrument where which can tell you everything to do. So that is not going to happen. I don't want to give you false hope. There's no such thing. I can give you the knowledge piece, I can explore these things for you and show you, but I don't have any machine which I can tell you, which will tell you everything, that how to select the stock strike price, how to select the instrument, or everything else. Like, you may have hundreds of questions. You can also say that why you chose to trade only bank nifty, why not nifty, why not certain stocks. So some of the questions will be can be answerable by a teacher but cannot be answerable by a trader because he's doing with his own experience. So even after learning from me all these things, you have to have your own experience. That's my answer. So don't keep on asking this question and again. This is one extra effort we are taking to give you confidence. Okay. I don't want to give you tips in the live market, and that's why I am going to share these things on Telegram, that what is my open position or what I closed after only the market. So don't consider these also as a tip, because this will be some completely a criminal thing to do, basically giving any kind of tip. So I'm not giving you any tip, because anyway, I have shared the screen with you once the trade has happened already, right? Now, tomorrow you cannot take the same trade because market will move from here and there. But certainly you can take certain clue that, okay, there are situation where people can design certain trades where they can have probably win-win scenario in all case scenarios. All right, let's consider this also and finish this off. Let's, in fact, this one I have not calculated, so I'll calculate in front of you only and see whether I'm going to make any loss or profit if market closes 1% up and there's no volatility. All right, so let me do it for you guys. So what gonna happen now? So market is going to be 1% up. So 36,400 is what it will go to. And let's talk about this after 1 day. This call option thing. Sorry, 36,500 is our call option. This is what we have written. So after 2 days, let's see what will be the price. So tomorrow the price will be 380 rupees. And this is 570 points what we have taken. So 380 rupees will be the price. And certainly we will make a loss there. Now, did I do anything wrong? No. So 36,400, 36,500. Now let's talk about the put. So 35,500. 2 days left. Volatility almost the same, 39 IV, and I'm assuming there's no fall in IV. However, there will be a fall in IV for this week trade for sure. I mean, the gap between this week IV and next week IV is going to narrow. This is another assumption of mine, which I have taken. So, because this kind of gap should not be there actually. So, moving forward, in this case scenario, I think the forward volatility should be higher than the current volatility. So, that is one of the reason also I took this trade. So, put price is 106. So put here 106. All right. So we are going to make money even in this trade. There is a very, very high chance. So we have now 36,500 call for monthly. So 36,500 call, interest rate 10, days to expiry 9, and volatility was 30. So let's see that what will be the monthly call option price. So monthly call option price will go to 747. So let's place here 747. Certainly this price will increase, but this is going to decrease significantly. So 36,000 put. So here we go for 36,000 put. 36,000 put. Volatility remains almost same, 33, though it is 32.5 actually. So let's change it. 32.5. Then put option, and the price comes down to 517. 517. Well, you see that even in this case scenario, you have 38, 39,000 profit. I was like already did this calculation in mind, but and I was confident that even when market will go up, because I have taken more calls and I knew that if you would have also observed that if market is going up, volatility of the current strike or the current expiry options decreases. So on that gut feeling also I took this trade. So you see that you have three case scenarios. One, market stay flat, one, market goes down, another, market goes up. And on paper at least it is showing me profitable in all these three case scenario. Now market is very dynamic, anything can happen. There's no guarantee that tomorrow we'll book a profit, but at least we have certain predictability. And with that predictability I took this trade. So this is what the explanation of this open trade. I hope you were able to make some sense out of it. Did you get all right, let me see the questions people have asked. So all right, good evening everyone. So yeah, after a very long time I'm coming live. All right, so no such questions on the subject, but yeah, let me check. So some people who are asking that, whether it is going to be Hindi or English. So see, today we have covered this in English. Tomorrow, and it's already 10:15. I don't think I'll be able to take in Hindi now. So tomorrow we can take in Hindi the same thing. And people who are asking is about the course. So the course is in both Hindi and English language both. So if you go to the courses, I mean, we have launched it in Hindi and English also, and we have changed the format in terms of we are taking also the live sessions strictly 5 days continuously to cover all the doubts for all the new batch participants. So we are trying to cover, a lot of people wanted to cover it very fast. Otherwise we are supporting also users who have joined us last year somewhere in June, and in those days. So yeah, I mean, so Shanvi, this is not going to be a class actually. So don't ask these questions. It is just the explanation session of everyday trade. So everything got a purpose, the purpose of recorded lecture, the purpose of live lectures, the purpose of live doubt session, and now this new things which we have started for you people, where I am taking trade and then I'm explaining you that what was there in my mind and why I took this trade, how how these trades are faring. It is just to give you a one very practical experience. So we are going to do it daily, and if you want to do it daily and at least for next 10, 15, 20 trades till the time you people have enough confidence about it, then let it run in that format. Don't bring everything here. So right, so I have done it, guys. I mean, you can do it also by yourself. Everybody, you all have access for this. I don't think I have done any mistake, but even if I've done any mistake, you can tell me. But I'm damn sure I've not done any mistake because even when I was closing these trades, I mean, when I was allowing these trades to go for tomorrow, then that time I calculated all these things. So that is all. Let's meet tomorrow again at the same time, 9:30, and tomorrow we will see that how exactly. So today these all things look very good on paper, where it's showing some good 2-3% return on capital. But let's see where SGX Nifty is. So US market is almost 0.5% down or something like that. But I heard that someone forwarded me a news about Russia attacking Poland. So you never know what can happen. So whatever happens, I mean, profit and loss is part of the game. As I told you that already in this account, from the time I started trading to exhibit you new trades. So far we were telling people only about the iron condor because that also keep a lot of behavioral finance into check. And this is another theta decay forward volatility based trade, which I'm explaining you. I don't know what you will call this a strategy for, uh, but yeah, purely based on volatility calculation, purely based on Greek's calculation. And no, this is not for intraday Rituraj, but yeah, 1 day, 2 day. So this trade life is maximum till this expiry, right? Because I have written this week expiry, so maximum 3 days more. So today is Monday, Tuesday, Wednesday, Thursday. Thursday, my preference would be not to take this trade away. Take this trade. I don't want to go with the expiry in these trades unless and until there is a loss or something like that. My call would be to book the trades tomorrow or a day after tomorrow, when most of the theta decay has happened. All right, see you tomorrow, guys. We'll meet at 9:30 tomorrow and see how exactly these trades are there. Either we'll meet or I'll send you the update on Telegram. All right. Thank you. Obviously, if I make loss, I it will be very difficult for me to come live and explain. But yeah, I'm just joking. I'll come live. I'll come live and I'll show you the outcome of these trades. It's a test for the teacher himself, uh, and I should be giving this test. So these Greeks calculator you can find within the course, guys. So you can go to my website, kundankishore.in, and if you enroll to this course, I think some people who have not enrolled to the course have also joined this session. So because I'm doing it on YouTube, I think notification goes for every subscriber. So you can go to let me just show you once. So if you go to my website kundankishore.in, go to the courses. Here you have advanced course on option trading in English and Hindi both. So you can enroll from here. Thank you. Thanks all. Let's meet tomorrow. Thank you. I hope you learned few things. Even if you're not, you can watch this video again. Try to do few things by yourself, and try to make some trade by yourself also, and try to test how exactly it will fare tomorrow. And yeah, thank you. Thank you, guys. So, did it? I mean, how do you guys think? I mean, should we continue this session of the trades, or I mean, is it making sense? वी मिस्ड यू अ लॉट सर, आप कहाँ थे? पता नहीं, मुझे यूट्यूब पे आने का बहुत मन ही नहीं करता है। ऑलरेडी यूट्यूब पे इतना कंटेंट है, इतने सारे लोग इतना कुछ डालते हैं मेरे पास। आई डोंट नो, सो द कंटेंट व्हिच आई वांट टू पुट इज एक्चुअली, तो आप लोगों के लिए मैंने हिंदी में देखिए डाला तो है। जो लोग अभी हिंदी में ये देख रहे हैं, आप अगर यूट्यूब पे जाओगे, 1 मिनट में आपको दिखाता हूँ। बहुत सारी चीज़ें तो हम लोगों ने वहाँ पे डाली ही हैं। जैसे आप यूट्यूब पे अगर जाते हो तो एक ये सीरीज़ है, आप इसको देखोगे तो काफ़ी मतलब ठीक से बताया है। मतलब आप ये पूरा सीरीज़ देख सकते हो। और इंग्लिश में कम डाला है मैंने, बट हिंदी में तो डाला है, तो आप ये सब देख सकते हो। एक बार ये ग्रीक्स वगैरह के बारे में आपको बताएगा। सी ऑल आई वांट दैट यू टेक यू नो व्हाट यू कैन से, यू आप एकदम अवेयर होकर के ही ट्रेड करो, नहीं तो फिर कोई फ़ायदा नहीं है। मतलब वो पूरा गैम्बलिंग ही बन जाएगा। ठीक है, ठीक है। थैंक यू गाइस, थैंक्स अ लॉट। ऑलराइट, बाय, टेक केयर।